Hey traders, Desmond here. Welcome back to the IronFX Trading Podcast. Today we're tackling something every trader runs into sooner or later, a losing streak. Not the kind where you lose one trade and feel mildly annoyed. I mean the kind that messes with your confidence, makes you second guess your strategy, and tempts you to do something reckless. So the big question is simple. How do you handle a losing streak without blowing your account? Here's the thing. Losses do not kill accounts. Bad reactions do. Let me frame it with an analogy. A losing streak is like hitting an icy patch on the road. The worst thing you can do is panic, oversteer, slam the brakes, and whip the wheel around. Right? That's how you spin out. The best thing you can do is boring. Ease off, stabilize, get traction back, then continue. Trading is the same. When you're losing, the goal is not to win it back fast. The goal is to stop the bleeding and protect your decision making. Timing is everything. Now, step one is to define what a losing streak actually is. Most traders label it a losing streak based on emotion. 2 losses and they feel cursed, right? 3 losses and they start blaming the market. 4 losses and they want a brand new strategy. But professionally, you need a definition that keeps you grounded, right? Practical way to define it is this. A losing streak is when you hit a preset drawdown limit or you see a cluster of losses that suggests market conditions may have shifted, even if your strategy is still valid. Because yes, losing 4, 5, even 6 trades in a row can happen statistically depending on your win rate. The losses are not the emergency. The emergency is what you do next. So let's talk about the 3 classic account killers during a losing streak. First, revenge trading. You take a loss and the next trade is not a setup. It's a punch. You increase size, you skip confirmation, you chase price. It's like getting tagged in a boxing match. And instead of tightening your gut, you swing wildly and walk straight into a clean counter. Second, strategy hopping. Breakout trader today, mean reversion trader tomorrow, scalper by lunchtime. Here's my hot take. Switching strategies mid-streak is often just emotional relief dressed up as analysis. You're not fixing the system. You're trying to escape discomfort. Third, the most dangerous lie of all. One big win will fix this. So you widen stops, ignore risk, and take one oversized swing. And that's how a losing streak turns into a blown account. Now let's get practical. When you're in a losing streak, your first job is to reduce the chance that your next decision is emotional. So here's a clean, simple protocol. And first, cut risk immediately. If you normally risk 1% per trade, drop it to 0.5% or even 0.25%. Not forever, just until you are stable. Because smaller size calms the nervous system. It stops the urge to force trades and it buys you the one thing you need most in a streak. Mental clarity. Second, use a cool down rule. After 2 losses in a row, step away for 30 minutes, right? If you hit 3 losses in a day, stop trading for the day. If you hit 6 losses in a week, stop trading and review. That is not weakness, that is professionalism. The market will still be there tomorrow. Your capital might not. Next, you need to diagnose the real cause. A losing streak usually comes from one of 2 places, right? Either your strategy is fine, but the market conditions have changed, or your execution has slipped and you are not actually trading your strategy. Your job is to separate the 2. Ask yourself a few straight questions. Right? Did you follow your entry rules exactly? Did you move your stop emotionally? Right? Did you take almost setups that do not qualify? Did you trade outside your best session? Did you ignore obvious context like trend direction, support and resistance, or major news risk? If your execution is messy, that is good news, right? Because execution problems are fixable fast. But if your execution is clean and you are still losing, then we look at conditions, right? Let me give you a practical example. Say you trade euro-dollar with a breakout approach. In a trending market, breakouts can feel like jumping on a speeding train. You get momentum, you get follow through, you get clean moves, right? But when euro-dollar is stuck in a tight range, breakouts can become a cruel joke. Price pokes above resistance, triggers you in, and then snaps right back inside the range. That's a classic liquidity trap. So if your losing streak comes from repeated false breakouts, right, it does not automatically mean your strategy is broken. Right? It might mean volatility is compressed in rises, so follow through is weak, and your edge is temporarily reduced. Right? That's not failure. That's adaptation. Now let's lock in the core principles that stop a streak from becoming a disaster. Principle 1, your max daily loss is your seatbelt. Set a max daily loss limit like 2% or 3% and treat it like a circuit breaker. When you hit it, you are done for the day. Not because you cannot win, but because after that point, your psychology shifts. And trading while emotionally compromised is like driving faster on the ice. Principle 2. Never widen stops just to avoid being wrong. Now, if your stop placement is invalid, fix the strategy. But widening stops out of frustration is not giving it room, it's moving the goalposts. The market does not care. Principle 3, protect your A-plus setups. During a streak, you only trade your highest quality opportunities. No bottom trades, no maybe, no chasing because you feel behind. If your strategy needs 10 trades to play out, fine. But those 10 trades must be valid trades. Now, here's something most educators won't tell you. The fastest way out of a losing streak is not chasing wins, it's rebuilding trust in your process. So here's a simple recovery plan. Step 1, drop risk to 0.25% to 0.5% per trade. Step 2, trade only one session per day, your best one. Step 3, trade only one instrument for a full week so your brain stops juggling variables, right? Step 4, take only A-plus setups based on a checklist you already defined. Step 5, journal the next 20 trades with brutal honesty. Record the setup type, record the market condition, trend or range, record your reason for entry, record whether you followed rules. Take a chart screenshot before and after. After 20 trades, you will know the truth. Either the edge is still there or conditions change, right? Or you have been freelancing your rules. That clarity is worth more than any single winning trade. And finally, the psychology piece. Most traders blow accounts because they tie their identity to outcomes. So when they lose, it feels personal. Right? But trading is not a moral test. Right? It's probability management. A professional, things like a casino. Small controlled losses, consistent execution, edge over time. If you feel like you need to prove something to the market, you are already off balance. Let's wrap it up. A losing streak is normal. Blowing your account is optional. Your job during a streak is simple. Reduce risk, slow down, trade only your best setups. Separate execution issues from market condition shifts. Protect your capital like it is oxygen. Because the real secret is not being the smartest trader in the room. It's being the most controlled when it matters most. That is how you stay in the game long enough for your edge to pay you. That's it for today. Follow the IronFX podcast for more practical trading education. Right? Trade safe, manage risk, and I'll catch you in the next one.